Hello everyone, welcome back to Trading Edge. So in today's video we'll discuss about a very frequently occurring low risk, high reward, high probability trade setup which will be executed on the 5 minutes time frame. So for this setup we need at least 2 days upward movement without much pullback or correction. Okay, so let's start. So the first point is, as we are looking for upward momentum, the trend should be up, sentiment should be positive, and on the last hour of the second day we should see strong buying momentum with good volumes or high volume activity in the second half of the second day. So these are the prerequisites for this setup. Okay, so let's start. So this is the first example. See, prices opened around here, closed around here, opened around here, closed around here on the second day. So we could say that demand is overcoming supply very aggressively on these 2 days. That's why the pullbacks are very shallow. Okay, bulls are in complete control over the bears. That's why we are seeing strong upward movement with very high volume, and the selling pressure is very weak. Okay, so this is the first point. So on the third day we saw gap up price behavior, and then again prices moved up towards the upside, so indicating that bulls are in complete control up till here. Then from this level we saw a retracement towards the downside, but again buyers proved to be very strong than the sellers and again push the prices towards the upside. But now what we see a bull trap setup, and also the volumes have gone down in the buying leg, indicating that sellers are coming in the markets at this price areas. That's why after gap up, strong buying momentum, we are not seeing a continuation after breaking the day high or the important swing high. Then we saw structural breakdown of this trendline support and also the last important swing low after failure to break the important swing high. So this is very important, and also the volumes have gone down. So we'll enter short here, stop loss here, and see the huge downside momentum after that. Okay, so what are the logic behind this setup? See, very important logic is that prices have moved up from here, then we saw inability to break the last important swing high by the bulls, and also the volumes have gone down. Then we saw a structural breakdown of the price behavior on the chart. So we'll enter short here, stop loss here, and see the huge downside movement after that. So the bulls who have bought from here would start booking their profits if they see any negative price action around this price areas. Why? Because prices have shown an extended rally towards the upside without much retracement. So anytime a deep correction or retracement is pending in the markets. Okay, so that's why we will play for this retracement leg. And also remember, fresh sellers would enter in the markets at this price areas. Why? Because they would also see that prices have moved up aggressively towards the upside without much correction. So fresh sellers would also enter on any structural breakdown, and also the bulls who have bought from here would start booking their profits as soon as they see any negative price action. So this is the main reason behind working of this setup. Okay, so this is the first example. Now let's look at another example. So see, from here prices have moved up towards the upside, then again on the second day huge gap up, then again prices moved up and closed around day high, again gap up, and again so parabolic movement of the price with huge volume activity, indicating exhaustion in the markets. Why this could be a potential exhaustion move? Because prices have moved up from here to here. Already a huge movement is done in the market. Then we saw huge volume activity and parabolic price movement. Remember that parabolic price behavior is not sustainable. Prices move in the form of waves. Okay, so if we see any parabolic price movement with huge volume after a gap up, after 2 days of trending move without much pullback, higher chances that a deep correction or retracement is pending in the markets. So we will look for potential reversal setups, and also here look this buying, no volume. So after this exhaustion, potential exhaustion move with huge volume, after a strong trending upward movement, we saw multiple factors to enter short around here, stop loss here, and see the huge downside momentum after that. Structural breakdown occurred with no buying activity. Okay, after a exhaustion move with huge volume on the third day. This is very, very important. Okay, so let's look at another example. See, first day huge trending move, second day good trending move, third day gap up, then again buyers pushed the prices aggressively towards the upside and broke above this resistance. But what happened? Immediately prices reversed, forming a negative price action, and see, we saw a price and volume divergence that is also happening here. Candles X and Y have similar spreads, but what happened to the volume? The volume at Y is significantly higher than that of X, indicating that sellers are entering the markets at this price areas. That's why spreads have remained the same but volumes have increased, indicating seller activity. Why? Because prices have already moved up significantly towards the upside. Then we saw a parabolic price movement with huge volumes, indicating exhaustion in the markets. Then we saw a structural breakdown. So we will enter short here, stop loss here, and see the huge downside movement after that. If prices open with gap on the third day, the probabilities increase in our favor that yes, prices now could potentially reverse and move towards the downside. Okay, so this is very, very important. And also, if we see any parabolic price movement on the first hour itself, this is another very, very good sign that this setup would work in our favor. Okay, so do remember that. See here, huge price movement towards the upside without much pullback. See, the correction should be very, very shallow or weak. Why? Because we want the buyers to be very, very aggressive. The bulls should be very, very aggressive. Aggressive buying. Okay, so if this kind of setup occurs, success rate of this setup is 70 to 80%. See here what happened. On the first day we saw strong bullish pressure, second day again strong bullish pressure, third day again we saw strong bullish pressure. Then what happened? We saw exhaustion. Candle Y had huge volume. Okay, and this is happening after 2 consecutive trending days without much correction. This is very, very important. This volume is occurring after 2 days of huge trending move towards the upside. Okay, now immediately prices got rejected from this level, trapping the breakout buyers here. So we will enter short here, stop loss here, and see the huge downside momentum after that. Why we will not enter on this breakout? Please do comment down below why we will not enter here on this breakout. Because the previous 2 days prices have moved up significantly towards the upside without much correction. This is very, very important. Without much correction, prices have significantly gone towards the upside. Now see here, on third day prices open gap down. Okay, prices opened gap down, then again bulls push the prices towards the upside. So from here prices are continuously moving towards the upside without any deep retracement. So anytime a profit booking, retracement or correction would come in the markets, and also fresh sellers would start entering, seeing any negative price action at higher levels. And also the bulls who have bought from here would start booking their profits. So in both cases we would see a potential correction or retracement, so we would play on that. Okay, so we will never enter on this breakout. Why? Because of 2 trending days previously. Okay, opened around here, closed around here, huge gap up, closed around here, again huge gap up, moved up significantly towards the upside with huge volumes. So what is this indicating? This volume is indicating exhaustion in the markets, potential exhaustion. Why? Because prices have moved from here on the first day without much correction and closed around day high, again gap up, again closed around day high, again gap up, and again on the first hour itself we saw huge volume activity. Okay, huge volume activity. Then on intraday session itself we saw gap up. Okay, then multiple rejection candles that is occurring after a strong and established upward movement with potential exhaustion in the background. So we will enter short here, stop loss here, and see the huge downside momentum after that. Why will enter short here? Because this is structural breakdown. So the bulls have bought from here would start booking their profits if they see any negative price action occurring at higher levels, and also the fresh sellers would enter short here, seeing structural breakdown in the markets. So this is a very low risk, high reward, high probability trade setup. So I hope you got something very important learning from this video. If you found it useful, please do consider like, share and subscribe to my channel, and also do comment down below if you have any queries related to this video. So see you in the next video. Until then, it's bye from my side. Take care everyone. Bye.